Welcome to Showcase Broadcast Studios, Real Talk with Michael Wardy. My name is Michael Wardy. I'm a certified financial planner and regional director at Source Advisors, where we are working with our clients to help increase cash flow through various tax strategies. Today is Friday, the 12th of November. I have done 63 broadcasts, and I am so excited. And the reason I bring it up is because today is the first time I've had a colleague with me live to talk about something that is very, very timely. And I know for me and for all of us, it's impacting us. I want to welcome Sara Richardson, who is the director of our LIFO group here at Source Advisors. Sara, welcome.
Hi, Michael. Thanks for having me. I didn't realize I was the first colleague on the podcast. Thanks for having me.
For 2 years, it took me a couple of years just to get ready to bring you in. So I'm so excited you're here. Thank you. We have a lot to talk about within like a half hour or so. So I want to get to it. But Sara, before we jump in to this topic, this timely topic, can you share a little bit of a background of yourself?
Yes, absolutely. I have been with our firm, which is now known as Source Advisors, since 1995. I actually started fresh out of undergrad at the company then known as LIFO Systems. And our firm at the time did only LIFO accounting for automotive dealerships. So we specialized in a couple of different methodologies, helping CPAs and their automobile dealership clients with their LIFO processes. During the late 90s, of course, was software boom. So we became a software provider also. And then as the 2000s were rolling around, our company needing growth, and I wanted to be a part of that, helped with developing LIFO offerings for all types of taxpayers. So we introduced a couple of methodologies to help retailers, manufacturers, wholesalers with LIFO accounting. So that has been something I've done since really the early 2000s as far as non-automotive LIFO accounting. I've worked on the customer service team and then the implementation team, and actually led the department for many years. Background work for too long, and now I'm back kind of talking to clients, which is really my passion, working with CPAs, helping them help their clients save money.
Perfect. I love it. And I think a lot of people do as well. So my first question I'm going to ask you in a second, but we are live, and we are live on YouTube. We are live on Twitter, and we are live on LinkedIn. If you have questions, if you want to just click like, please do share this information after the broadcast with anybody you know that could benefit from this information that we're going to go through. Sara, here's my first question. And I'm going to try and say it without a famous comedian's tone of voice, but what is going on? What's the deal with inflation?
What's the deal with inflation? And if you've been watching the news this week, even it's being talked about more than ever. This week, of course, October inflation was released from the Bureau of Labor Statistics, both CPI and PPI, and it's reported as a 30-year high. So inflation is, while it's been consistent, obviously, over the last 90 years, really. One of my team members one of our tax directors had recently done a study to just look back at the trends of LIFO, and it's been fairly consistent with some big jumps, really since the 1930s. But right now, all-time highs.
It's crazy. It's crazy. And I know for me and a lot of all of the consumers out there, we see it and we're experiencing it. So like gas and eggs and milk and everything is going up, but from a corporate standpoint and a business standpoint with their inventory, how is it affecting the taxpayer or the business?
Yeah, for businesses, both small and large, obviously they're paying more for their products. So cash flow, less cash on hand because they're having to pay more. They're using their profits, savings in order to just keep their inventory levels up. Of course, there's also this supply chain issue that unless you've been under a rock, all of your listeners have heard about. I think we joked at our office that more people have said supply chain in the last 3 months than in the history of the last 30 years. It seems like
yeah,
definitely supply chain issues. But for taxpayers, they're spending more. They're spending more to try to keep their inventory levels up.
So they're definitely spending more, which ultimately is impacting us.
Mhm.
And I know I've known you for 12 plus years, and we've talked about LIFO in the past, but it's coming up more in conversations with CPAs and tax advisors. Um, Tell us a little bit about LIFO. What makes a company a good candidate? Why would somebody do it? Maybe I'm just throwing too many questions. So let's start with what businesses are good candidates
All
for
right.
LIFO.
Any taxpayer, manufacturer, wholesaler, distributor, or retailer that has at least, $1 million to $2 million worth of inventory is
Mhm.
really a candidate to look at LIFO. And of course, the driver of LIFO is inflation. So a little background, of course, is that LIFO is going to increase cash flow by removing the negative effects of inflation. So a taxpayer that's experiencing inflation, whether they are a distributor of like plumbing supplies, building materials, as everyone knows, those are areas, lumber, that are experiencing a high inflation right now. Whether they're small business or a large business, they can take advantage of LIFO by removing those negative effects of inflation.
So LIFO obviously stands for last in, first out. Um, how do you start doing it? Like, do you
Yeah.
just say, okay, hey, I'm ready to switch to it, makes sense? And then also, what happens? Like, after you start, can you just say, I'm done with it? We're starting to see a decrease. Now I'm jumping into really some of the meat of this
Yeah.
question. So let's go back a little bit.
Yeah, let's talk a little just about LIFO and what it is for any of your listeners who aren't familiar with it. I mentioned you're increasing cash flow, kind of the hot button, ultimately reducing taxable income by removing inflation from a taxpayer's year-ending inventory. You mentioned rising inflation, rising prices on milk. So let me give a super simple example. You won't even need a calculator to follow along, but let's
Thank you.
assume let's assume a taxpayer is just selling milk. That's all they do. They're just going to carry this one product, and it's milk. At the beginning of the year, they had 10 gallons, and that was $1 each. So even quick math, you can see they had $10 of worth of inventory at the beginning of the year. At the end of the year, the price of milk is now up to $1.40 per unit. So they've had 40% inflation. Well, they now have 14 gallons. So they've got, almost $20 worth of inventory, $19.60. They've got higher price of inventory with just 4 more gallons of milk or 4 more units. So what we're going to do is we are going to assume, LIFO is going to assume that the taxpayer, and obviously it's a simple example and even silly to some extent, because obviously they don't have the same milk at the end of the year that they had at the beginning of the year. But what LIFO is going to do is assume that the last in items are the first out. So that of those 14 gallons in inventory at the end of the year, 10 of those are still there from the beginning, that the lower priced, earlier purchased items are still in inventory. So at the end of the year, those 14 gallons, we're going to say, okay, those first 10 still
Mhm.
just are worth $10, $1 each. And then we're going to bring those next 4 in at the current price of $1.40 for a total of just under $20 of $15.60
Mhm.
compared to that $19.60 of actual cost. And that $4 difference is what we call the LIFO reserve. That's the difference between their actual cost of inventory and the LIFO value of their inventory. So when they go to pay taxes and say, hey, here's our inventory value, instead of saying $19.60 that they're going to pay tax on, they're just going to pay tax on the $15.60. That $4, that LIFO reserve, then
Mhm.
is a deferral. They get to keep that money. They're going to reinvest that in their business. Obviously, we're talking simple products and simple dollars. But when you throw several and multiple zeros behind that,
Right.
obviously, it can definitely increase cash flow for taxpayers. So I I may not be answering all the questions, but let's back up to that's the simple example is
Sure.
LIFO is removing the inflation so that a taxpayer can defer that tax paid. That additional reserve they can reinvest in their business um, to grow that business.
So it's kind of all virtual, which I get. So they're not actually keeping
Right,
that
great
inventory
question.
in there.
Right.
Um,
There's
Is
not
there
actually year-old milk in their inventory, so or multiple-year-old milk. That's a hang up that, that's a big question we get frequently is, well, they don't actually keep their old inventory. The inventory turns quite frequently, and yes, this is, theoretical to some extent. It is an accounting adjustment. It is not
okay.
something that they have to do day to day.
Okay. So are there products that this does not work for that you can't do? Because it sounds like when you're talking about milk or produce, obviously you're not keeping it there, but it makes sense right now. Is there something that you can't do this with?
Any inventory item that a taxpayer has, LIFO is an opportunity for. So if there's inflation, there's a benefit for any items. So you asked a minute ago about how do you get to LIFO? How does a taxpayer
Yeah.
start doing that? Um, One of the great things about LIFO, particularly for taxpayers that turn their inventory frequently, is they'll be able to see at the end of the year how their prices from year end to year beginning have changed. And a taxpayer elects LIFO for the first time by filing a Form 970 with their timely filed tax return. So it can be, by timely filed, I mean the year that it's due. It can be on extension, but they can't go back and amend for prior years. So at this point in time, if we're talking about 12/31 year-end taxpayers, really we are looking at the 2021 tax year. And if a tax return's already been filed for 2020, a taxpayer can't go back and elect. But a taxpayer they can look at the benefit for the current year and make the decision, hey, is this the year I want to elect? If there's any benefit there, there's no reason not to. They definitely want to take advantage of that tax savings.
So you can wait until the end of the year to decide, hey, okay, now it does in fact make sense,
Yes.
versus you don't have to elect it right then and there and it's on a go forward basis.
Right. You can absolutely make the decision at the end of the year, early in the year. There is one caveat that's a big deal with LIFO. LIFO, of course, is a tax savings. It's a tax benefit and a tax adjustment. But taxpayers are required to make a LIFO adjustment on their books as well. So for GAAP purposes, they do have to note that they are using LIFO and show that LIFO value. The catch there is that any annual statements that a taxpayer has must have a LIFO adjustment on it. So a taxpayer that at the end of the year thinks that they're going to move forward with a LIFO election and early in the next year, before they've even filed their tax return, they've got to get some sort of estimate. It doesn't have to be the final number if they haven't prepared a calculation yet. But some sort of estimate on any annual statement. So back to the car dealership, which was our company's bread and butter early on.
Yep.
Most all car dealerships have to have statements out to their manufacturers within the first 10 to 15 days of the year. So they need an estimate right off the bat because that's to their creditors. So any annual statement to creditors must have a LIFO adjustment. So that's it's called the conformity requirement. And that can be a catch for some. If you can't recall those statements, if you've already issued them and then in June, you think, oh, you know what, we should have elected LIFO. If you're not able to recall those statements, then we would not recommend a LIFO election because you would not be in conformity. And it's just something the IRS is going to take a look at and say, hey, you didn't make this adjustment here, so no LIFO for you.
Okay, so you brought up one thing that I do want to touch on. Let's say right now, businesses are looking at it. We're getting a lot of calls and conversations about LIFO and inventory tax planning. Let's say they elect it. And now they start to see that next year, wait a minute, we probably shouldn't be on this. Can they just switch on and off, or how does that work?
LIFO is absolutely a long-term investment.
Okay.
So they can elect off of LIFO after 5 years automatically. So a taxpayer that elects LIFO for the first time is kind of locked in for 5 years with that automatic election off. During those early years, if there's a significant reason that they want to elect off, they would have to file a Form 3115 with the IRS before the end of the year at a fee of, I think it's $11,500 currently, to request permission to elect off. So it's not something that we see very often because there is an automatic approval after 5 years. But let's talk about the reasons why a taxpayer might want to elect off of LIFO. Significant decrease in inventory is one of those reasons. We're seeing that right now with our automotive clients.
Look, I'm gonna stop you right there because I want to talk about that because that's across the board. I mean, we were at a restaurant last night and they were saying, this restaurant was impacted by everything and their inventory is low as well. What happens? Like it's not their decision to have low inventory. How do they?
Right.
I don't even know what the question is here, but it's a big concern. Help me here.
It's pretty tricky, actually. In general, LIFO is going to be a great opportunity for anyone with steady or growing inventory and inflation. So if that inventory level is going down, while there is still inflation, it's still going to be beneficial for them as long as that drop isn't too significant. Of course, we have to put dollars to it, but not substantial. We are seeing with our automotive dealerships and anybody who's driven out and about in their town sees that automobile dealerships right now have significantly decreased inventories. Some 50%, some close to 90%, even only a couple of vehicles sitting on their lots. Well, that's a big problem. The Treasury actually has the ability to offer some relief for that. They haven't had to use that power since the 1970s during the oil embargo days, but they have some authority to offer some relief to those taxpayers, particularly, companies that are going to end up, they're going to be laying people off. It's loss of jobs. Obviously, I'll say a tax burden. If a taxpayer has gone from having $10 million in inventory to having $500,000 worth of inventory, then when they do that final LIFO calculation at the end of the year, that LIFO reserve that they have built up over, sometimes 30 or 40 years, would need to be paid back, and that's a pretty substantial call on the taxpayer. If they elect off of LIFO, then they can spread that out over 4 years. They wouldn't have to pay it all at once. So we do see some taxpayers electing off of LIFO at this time, particularly if there's a huge problem with supply chain. In general, what we are seeing right now is while taxpayers may have reduced item counts, so if they look at they feel like their inventory is low, and or fortunately, because of inflation, their dollar value of their inventory is not down near as low as many have expected. So I'll talk to taxpayers who say, "Oh, our inventory is way down," and I'll say, "Well, tell me more." Well, we had $15 million worth of inventory last year, and our shelves were full, and now we're down to 13 million. Well, that's not really huge. So that can still be a benefit for them and is a great time actually to take a look at LIFO, because that is a time that even with decreased inventory, with inflation, a LIFO reserve is going to be there.
So this sounds good right now. Unfortunately, it sounds good right now because of inflation. It seems like it's going to continue. Yeah. What are the what's the disadvantage of doing it? I get that. Well, if we start to see stagflation or deflation, you could have that impact, and the reserve could be paid back, assuming that we're on this continued movement forward of inflation. Well, let's skip a little bit. What are we seeing with inflation? What have you heard from the economists about inflation for the next couple of years?
Yeah, while we don't have an easy button or a mirror ball, able to predict the future, it really seems that inflation is here to stay for the near term, definitely. At this point, our tax director is working with economists and really believes that into early 2023, at least, we will be seeing continued inflation. So that during this point in time, with the 2021 year end here at hand, definitely inflation for this year. We absolutely expect it to continue through 2022 as well. So what happened is a taxpayer elects LIFO in these days of high inflation, and it continues to grow. If that inflation studies just kind of stay steady for a while, they don't lose that benefit. It sits there. They've saved the money. They're not paying that back. Years of deflation is where a taxpayer is going to have some LIFO income and have to give back some of that. However, what we know is that over time, inflation steadily grows. There will be ups and downs. Right now, lumber, of course, is up high. About 5 years ago or 4 years ago, I had a client for the first time electing LIFO with, at the time, was the highest inflation I had ever experienced with an implementation with a client of about 32%. So huge benefit, huge benefit. It was perfect for them in that year to have that tax savings. Lumber's a commodity. I mean, it was right back down about 28% the next year. So the next year they had some tax liability, but with the net present value of money during that year, they were able to, that the tax bill was due and not have to pay it. And they were able to reinvest in their business, grow that money. Definitely a long-term investment. While we do see people jumping on the bandwagon right now because it's a great time to jump on the bandwagon, always it's a long-term investment because we know that LIFO is going to be beneficial long-term with inflation, and there's always going to be inflation long-term.
Are there industries that when you talk with a client or a tax advisor, are there industries that you would say right now they're being impacted by inflation, but in the history of your experience that generally this is not a good industry? Are there industries like that? And do you tell prospective clients and CPAs or tax advisors that you may not want to elect on LIFO because historically it hasn't been a good
great question.
Industry?
I typically, in working with CPA partners and with their clients, will take a look at what's happened historically. So if I'm going to present them an opportunity of, hey, here's how inflation's looking in your industry this year, I'm usually going to go back and pull that same industry, that same mix of inventory for the last 5 years and say, here's what's happened historically. So, and typically, of course, our clients know their business and taxpayers know their business. They know, hey, huge increase, a few years back, it stayed steady, prices went down. So they typically know their history, but it's good to take a look so that they can do some future forecasting based on historical facts. They don't always know what's going to happen, but that's just sort of the approach we take is let's look at what's happened historically in your business.
Okay. And that's good to know. Okay. So we're going to switch and go a little techie or kind of geek out on LIFO. There are a couple different ways to do LIFO. I know that we've had companies that we've talked to that have done what's called the internal method. I know we recommend the IPIC method. For those that are not familiar with this area, Sarah will give a little bit of a overview of each of these. This is not scripted, by the way. I didn't even tell Sarah that I was going to ask these questions, but I think it's important for people to know that, hey, we're going to do LIFO. If as a business owner or as a tax advisor, you need to know that there's different ways and different approaches and what could make the most sense for you. So Sarah, share with our audience what internal method looks like, IPIC. We don't need to have a whole deep education behind it, just an overview of it.
Yeah, definitely. And certainly, if a taxpayer wants to look at LIFO, they should look at both methodologies. Easy, I say easy, but first off the bat would be just to take their inventory to date, pull their inventory file at the end of the day today and compare it back to a file from the end of the year. So SKU to SKU, quart of milk to quart of milk, gallon of milk to gallon of milk, and compare pricing. What's your difference? What did you pay December 31st? What's on your books at December 31st versus here in November? That's going to be their quick and easy internal methodology, is measuring inflation on their actual inventory from the beginning of the year to the end of the year, like our simple example earlier. That's an internal index method. There's few obstacles with that. If this year at the end of the year they've got gallon of whole milk, and last year they didn't carry gallons of whole milk. They only carried quarts. You then kind of figure out the nuances of that. So there are some nuances, but it's not rocket science. It can be figured out. So definitely that's a good way to just see what's happening internally. Another way would be the IPIC methodology, which is using published price indexes. So I mentioned earlier about CPI and PPI. Those are the indexes from the Bureau of Labor Statistics that is measuring inflation domestically. The IPIC method was actually designed and released by the IRS many years ago. They created it, and they're using those external indexes as opposed to what you're paying internally. So in those cases, a taxpayer actually looks at their industry. High level, I can just kind of take a look at what's happening on the PPI or the BLS website, review what's happening in different industries, and get an idea of what might be applicable to theirs. For an actual calculation, of course, they've got to, for both options, internal or external indexes, they've got to dig in and do some legwork to make sure they're getting everything done correctly, and of course getting the best tax benefit, because it is a huge tax savings. So they want to maximize the benefits of that.
Perfect. And Sarah, of course, my last question is, what does IPIC stand for?
Inventory Price Index Computation. And some of our listeners may say IPIC. We have historically said IPIC, but we don't. It's like, niche. I'll jump in and say whichever my friends that I'm talking to are saying. So IPIC or IPIC is fine.
Perfect. Sarah, as we're wrapping up, any parting thoughts, any advice or guidance that you can give to our listeners, our viewers? I want to first of all, and also thank you for joining. Also, thank you everyone for joining today. Before we wrap up, Sarah, what are your thoughts, advice, guidance that you can give?
Yeah, to our listeners who may be CPAs or tax advisors, this is a great time to just offer this up to your clients. See if it's an opportunity for them. Set yourself apart as bringing an additional service to your clients. To taxpayers who are looking for ways to increase cash flow, and as we all are looking for ways to pay less tax, this is the year to take a look if you haven't in the past, and a great way to save some money, reinvest in your business, grow your business, take care of your staff, take care of your employees. It's a great time for that.
Yeah, absolutely. And the great thing is that if you do have questions, want us to take a look out and determine if LIFO will benefit your company or your clients, you can absolutely reach out to me. You can also reach out to Sarah. Since we work together, it's pretty easy. Thank you, everyone, for joining. We appreciate it. Definitely, if you know somebody that could benefit from looking at LIFO, reach out to us, share this broadcast with them. I will move this onto my podcast, which is currently in 27 countries. So I'm excited about that. And I will continue to do these broadcasts to help bring additional insight of what's available to businesses and all these companies and providers that could bring value to your company and to your clients as well. Sarah, thank you again. I appreciate it. Have a great day.
Thanks for having me. Bye-bye.
Take care, everyone. Bye-bye.